So the headline is revenues better than expected.
Right.
Provision half of what the market expected. So a lot of your net positive to the street is going to be this provision number, which while you don't get a lot of credit for that, it goes back to this fear factor about recession. I think it speaks to the fact that the credit costs are going to stay very low for a longer period of time.
How far out can the bank see? If somebody like a JP Morgan who has so many clients and customers, are we talking 3 months, 6 months, a year?
You can have clarity for a year. You're supposed to have that, at least in accounting principles. That's what you're
I just mean in terms of what you see in the economy.
No. So we have a credit cycle monitor that we used when I was CFO at a bank. And that monitor takes in a lot of different indicators. And the banks have these types of things that they're using. It'll give you a good 12 to 18 months that you can look out. Yeah.
What's your stock price for this company now, 12 months out at this point? And how's your model change after this morning, or does it?
It really doesn't change that much. They're a penny or two different. Credit costs are a little bit lower. But this is what we expected. Again, we haven't been changing our models even when the prices have been going up and down. We keep that fairly steady, which is why right now we have buys on almost every bank we have, because we haven't just been adjusting estimates lower.
Is there anything in these numbers that changes your thinking or impacts your thinking on the numbers we're going to see from Wells and Citi at 8 o'clock and some of the numbers we're going to see from the other banks next week?
Gives us a little more confidence about net interest margin. The big issue is deposit betas have been trickling up. And that's not really having the negative effect because our calculation says the threshold of pain is really around 70-75%, not 50%.
Okay, final question from me, which is, of all the banks, and I know you have buys on a lot of them.
We do.
But if you're a retail investor watching the show right now and you can only buy one or two of them, who are you going to pick?
Yeah, you're going to pick a super regional bank like we talked about earlier.
Right.
We have Key Corp, we have SunTrust, M&T Bank, I think are good samples of things that can really take advantage of the environment that we have right now.
So just to put a fine point on it, you're not putting JP Morgan on that list, even though you...
Right. They're 12 to 15% upside, where we have 25% upside in some of these super regional banks. So again, very strong upside at JP Morgan, but much stronger at the super regional banks.
Okay.